Good morning, everyone. Hope you can hear me loud and clear. It's Monday morning. It's 10 o'clock in London, and welcome to the PropTrade.com. Very busy week ahead, very significant week ahead. Some very key bits of data being released. Some central banks, obviously, with something to say all week, but some key data. Obviously, it's Thanksgiving on Thursday, so US markets are completely closed on Thursday. Friday is a half day in New York. Markets are open, but very, very quiet, very low volume. So all the activities are going to be crammed into these first 3 days of the week. So as ever, be careful of volatility. And the other key thing, obviously, we've got the end of the month as well. So wrapping up positions, those that trade on a monthly basis as well. Some institutions like to tidy things up at the end of each month. Many don't, but many do as well. So watch all of that as we go forward this week. So it's Monday, the 25th. Let's get rid of my ugly mug. And let's have a look at the calendar as we go forward. So I hope you can see all this. It's not a great view, I don't think, to be honest. But today, the really only bit of data that's moved the euro this morning is the weakness or the continued weakness in Germany, and the iPhone numbers came in a little bit better than expected, 87.2. But the deeper data, the climate index was weaker than expected, and the current assessment is also weaker than expected. So really no break for the German economy. Obviously, the political situation there isn't helping, and the euro is very much under pressure against sterling, against all the majors, to be honest, against sterling, and obviously against the dollar. We were under 104 yesterday. We'll have a look at the charts in a minute, and how we closed our trades out on Friday as well. So quiet day today. I'm not sure the head of the Bubba, Mr. Nagel, will have much to say this evening. Things kick off tomorrow. We've got central Bank of Japan CPI data overnight in the Asian session. But the main news for Tuesday is the key consumer confidence, consumer board, consumer confidence, CB consumer confidence. Again, it's a highly volatile indicator, or can be highly volatile, but as we've said for many well, not many years, but as the US economy has been recovering, it's been the consumer that's driven things, and so a big tick up last month. It's also expected to tick up again this month to 112. So that'll be a key indicator tomorrow, 3 o'clock GMT, 3 o'clock Universal Standard Time. Tomorrow, new home sales as well. We had existing home sales and pending home sales last week. We got new home sales, very healthy. 725,000, a bit weaker than last month, but really anything of about 550,000 is strong for new home sales in the US. So this is just as interest rates come down. Obviously, the future of that path is a bit questioned now, but there could be some significant activity in 2024, 2025. Obviously, the new president and his a new Treasury Secretary will have something to say about that as well. That was a key announcement on Friday afternoon. Another very much a Trump loyalist. After lots of toing and froing particularly last week, names in the frame. But that was sorted on Friday, and hence we've got this bit of a sort of cooling in the dollars rally from last week a bit as well. So new home sales on Wednesday, on Tuesday as well, tomorrow. So big day tomorrow. Potentially for the markets, right? Wednesday is the top of the shop. We've got overnight. We got the RBN Z's rate decision expected to go again quite aggressively to 425, so 50 basis points to be cut from the RBNZ. Things are stagnated. Well, stagnate is the wrong word, but certainly slowing down there. And see what the head of the central bank have got to say down in New Zealand overnight. So that'll have a big impact on the Asian session. Obviously, the Kiwi also under pressure from a stronger dollar, a resilient and recovering yen as well. So key Asian data tomorrow from the RBNZ. We got meeting minutes from the ECB in the early part of the European session. And then we got a lot of stuff that's crammed, that's normally on a Thursday, crammed into Wednesday as well. So we've got the weekly claims out of the US, we've got durable goods, but the most important bit for me, the one I'm really looking forward to, the key data that the Fed looked to as well, is the PCE price index. It's the Fed's preferred measure of inflation. Obviously, it's coming down and it's expected to fall quite significantly again this time for the quarterly numbers. So watch that very significantly on Wednesdays as markets, it's the last big piece of data before the long extended weekend. Although markets are open on Friday, and the Americans do work very hard, and lots of people will still be in on Friday. Obviously, it's Black Friday. It's a big thing that the Americans have kicked off after the Thanksgiving holiday, which is fundamental to the American spirit, the Thanksgiving holiday. So everybody takes that as a holiday. Most people will take the Friday as well. So it's a long weekend, which is very unusual in the United States. And then we kick off December next week. So lots of data crammed in, lots of potential volatility, and that's all we need as traders. We just need a little bit of volatility, up or down. It doesn't really matter as long as we're on the right side of the move. We can make money in the move. So core PCE, key data for me this week in everything that's coming out. I say weekly claims, durable goods as well. And also, not to be forgotten, although it's backward looking, it's announced 60 days after the end of the quarter, but third quarter GDP for the US, 2.8%, cooled a bit from the much better than expected 3% last time. So we'll see what that number looks like again on Wednesday. So lots and lots and lots going on Wednesday. Chicago PMI is also later on in the day. And then remember, watch that PCE number on Wednesday as well. The oil Baker Hughes is also crammed into Wednesday. Thursday is obviously very quiet, although we have German federal CPI, but there'll be no direction from the US for the afternoon session. Things might cool down very significantly in the on Thursday as we run into the weekend. Obviously, as I say here, early close in America on Friday, although they are open. Very little volume, very little activity to be expected on Friday. Actually, I thought I'd read the Chicago numbers were actually on Friday, but perhaps not. It must be released Wednesday. I'm sure this is correct. European inflation on Friday, and some Canadian data as well. And yeah, I'm convinced there was I'll double check on the other calendars. I'm convinced the Chicago PMIs were actually on Friday, but it says Wednesday here. I'm sure that's correct. I might have moved them because of the shortened week. So lots going on. And then the PMI start for December over the weekend out of China as well. So next week we've got PMIs for the rest of the globe as well. So lots going on, even though it is a very compressed week. And let's have a quick look at the charts and where we are as far as moves are concerned. So let's start with the metals. Gold. This is gold on the daily time frame. Here, this is a simple moving or exponential moving average crossing strategy here. So the big sell-off we saw post-election has more or less been bought back. We rallied really aggressively on Friday. The interesting thing for me, if we look at the hourly chart on this one, the interesting thing for me was Friday's big rally in the close. So this is the last hour of trading on Friday. So it was a big strong candle. Buying took it. We'd already breached the 2700 level, but it was a strong close into Friday's close of positions on Friday on these derivative markets. So sold off a wee bit today, significantly to the 2675 area. So we're under the 2700 area. So intraday we're going to this triggered short here and followed through quite significantly in the Asian session. So currently today we've into a level we struggled with on Friday, not struggled with, we held on Friday, the 26.65 level, so found our support today. But I say, as far as the week ahead's concerned, the daily time frame still remains very well bid, although we have sold off. So it'll be interesting to see how much damage this does for the weekend. But we'd had a very, very strong week, so let's not kid ourselves. Positive, and a big Friday close as well, which is always a good sign from this post-election charge into 25.50. So 2,700 has been recovered on Friday. We're giving it up so far today, but still remains bid. And as you can see here on the daily, this 26.70 area is a key daily support area. So I'd like to see us above 26.70 on the close of this daily candle today if we're going to maintain this uptick. Obviously, next level would be the 27.40 level through here. You can see these end of day candles, and then the all-time high, which took us to 27.90 zone up here at the end of October. So gold remains bid on the daily. You can see the weekly chart is very, very strong as well. Into the 20-week moving average on the post Trump reaction, but a big candle last week over that key 2,700 level, and then you see that all-time high at 27.90, 27.85 zone is the next upside candle. So you can see the weekly very, very well bid throughout 2024. It's been a good year for gold so far. So some profit may be taken as we go into December, but it's been a good run, a very, very strong run. While we're just here on the metals, have a quick look at silver. Silver's back over the around about that 30 handle again. So 30 is held here for most of October and all of November thus far. So $30. We did get as high to test the 35 level, but 34.50 was our tweezer top we had here at the end of October, and then we've declined ever since. Really, now we're sort of holding above lows basically. So we that area here through 30.50 here has held. For the second half of November, more or less. Obviously, we did dip lower on an intraday basis, got to 20 under the key 30 handle, but certainly buyers for silver at the key $30, and then 30.50 has been the intraday or the end of day close. Again, testing that zone so far today. So gold and silver rolling over a tad today, having had a strong Friday, as you can see here. But again, with silver on a weekly basis, it's very much still holding above its 20-week moving average, having suffered the sell-off post election. So see where it goes here, a real pivot area here on the weekly time frame for silver bugs through this 30-50 zone for silver. Cryptos, we just go back to the top of the shop. Obviously, 98,600 for Bitcoin this morning. Again, and it's a weekly chart because that's where we started. But right old rally, as everybody I'm sure knows. We've rolled over on a daily basis, so we're compressing at high. The inevitability of 100,000 never actually came to fruition, but it really is just sort of stalling at highs. And the bullishness of the new president-elect around the crypto market, making the US the center of cryptocurrencies, crypto being accepted in more places across the US as well, which isn't really. People are talking about 100,000 is just a step on the way, higher, 200,000 easily within the next, well, not easily, but 200,000, 500,000 to the upside. Remember, there's a restricted supply of this stuff. There's only 21 million of it, and there's a lot of it's already out there. So with a very sort of deregulated mindset in Washington, and a very positive outlook for crypto from the administration, 100,000 doesn't seem, 100,000, 200,000 even doesn't seem that much of a rally, to be honest, or that much of a longer term target if this does continue to rise. But anyway, steady away, really a bit directionless last week. but small candles, so no decision, nobody selling really, nobody buying any further, but to push it higher. But we'll see. There may be closing out for end of month profit taking, put some money in the bank, then reinvest as December kicks in. But anyway, Bitcoin remains very, very well bid. The daily 20-day moving average, the key moving average I use is at 89,300. And we remain bid above the 5 and above the 9, all nicely aligned here on the daily time frame. Just sit tight, add to it on big candles is my approach when we're trading these trends, and see where we go. So we're just might be taking some profit out of that as we start continue to consolidate at highs, but that's a positive. Just because it's at 100,000 doesn't mean it can't go any higher. So Bitcoin still remains very much on the bid. As far as the oil market's concerned, we'll look at WTI. Again, another good week last week, coming down today through the key 70 level. Can't get to 70, 75, still way up here. We were last there at the beginning of October, so we've been looping lower, but this is, so we've been up and then down. And we're continuing to bid to the upside. So oil remains positive. We crossed on Friday, good closing out at just shy of $71. That would have triggered a long trade. In fact, it would have gone, it went long on the Thursday, didn't it? The 21st, here at 70.38 on this strategy. You see the zoom in there. You see the 5 has crossed above the 9 there, and then on this same day, which is quite unusual, it's a strong move. We've had a cross of the 21 EMA as well, the magenta line here. So we're a little bit out of sync. I'd like to see those a bit more in sync, but still, that's still long from 70.41 would have been an entry target on this end of day. Down a bit today, but in the money on Friday. Our stop loss initially down at the bottom of the turn, it would have been, the system would have pulled it at least to here now, and see if we go positive today, we'll pull it back up to the 68, 67, but that's oil to the upside. Let me have a quick look at the trades that were actually triggered on Friday on an end of day basis. There were 3, 4. Well, there was. I've got 2 little end of day strategies. There was 2 index trades and a forex trade, and a more aggressive strategy triggered on an index only on Friday. So let's just have a quick look through those whilst we're as we just looked at trending moves. So the indexes that triggered on Friday was the S&P 5. The S&P 500 at 5974. Let me just find the S&P 500, and we're back over 6,000 this morning. So this triggered long here on Friday, on Friday's close. On this strategy, it hadn't been short because this didn't cross. So this is still long from here. I haven't gone short here, and that didn't work out. But it's been long here, but it triggered again on Friday here. So let me just put this in. So this is long here on Friday. Stop loss initially, we'd have had it. I mean, it should be there. I mean, the rules for this strategy. I will this week or next week, I'll start running through how to set up some of these strategies I've got on my charts here for everyone. Follow what the rules are, but it's looking for turns in the market when you're looking for a trend. So initially, the stop loss should have been down there at 5877. Entry here at 57. I actually got filled at 5974. I don't know what that was. Yeah, that's about that. So that's nicely in the money. Initial target will be the initial there 6016. The end of day. Or the opening here on at the beginning of November, but this is going to trail. Remember, we are in a very bullish part of the year for stock markets, so this is long. Well, it's been, as I say, it's been long from this candle here on the 5th, and it's triggered long again. My system triggered long again on Friday on the 22nd, so stock double whammy. For the S&P 500. The other one that went long was it wasn't a Nasdaq, but it was actually the US 30. The Dow triggered long again, but again on this strategy here, this would have gone long here. Would have taken you would have taken you well, again, they're still aligned. See how they haven't crossed, they're still aligned, but you might have been stopped out if you'd got too aggressive with your stop loss on there. But this then went long. First small entry would have been on Thursday, but a full entry here on Friday's close at I was filled at 44,352 is when I got so a bit lower than this 44,378 here. So I got filled here at 44,352 on the US 30, and again another one that's positive and in the money. One that's out of the money. Sorry, the other one was the other one on a more aggressive strategy was the DAX, the JER 30. Where's the DAX gone? There's the DAX. There we are. And that was filled at 19,354 on Friday. What's that? 19,365. I was filled at 19,354, so 10 points below that closing number. And again, you see that's a classic there. The 5, the 9, and the 21 have crossed there. So that's long again there from Friday, and in the money. The ATR on this one, you sometimes use the ATR as a multiple, is around about 285 points on the DAX. So multiply that by 2 or 3 for your initial target. I like 1.5 to get my initial target. So we're well on, that's on the way, but there's obviously a bit of congestion. And that's why my blue line is at 19. 4.7 for a bit of resistance through there, so we've banged into that already there. But those 3 index trades are very much in the money. One that's not in the money, one that's out of the money at the moment, was a cross we took on Friday night, and that was the Swiss against the yen. The Swissy against the yen. Where's the Swissy yen? Here it is. We went short at 172.95 on Friday. There we go. We got 172.95 was our entry on Friday. In fact, I said that this strategy would have, well, it's been chopping around, as you can see, but it's not great from a trending point of view, simply because we're sort of as you can see here, we're a bit sort of chopping around channel bar, although it's biased to the downside, so it's with the trend. These longer crosses haven't worked out, but you see the down candles are much bigger than the up candles, and there's more red ones and green ones. That 3-day rally here didn't break this big down candle here on the 15th, from the 15th, and so that was an encouraging sign on Thursday, and it was fine, but the system went short Thursday, but the full trade was opened on Friday, and we're now out with the money at 7. So we got in at 72.95. Our stop loss is quite high, actually. It's back up there at 75.85, but we're looking for about 30 or 60 pips on that initially down here to take us to our target. Here is 72.35, which is just below this low here, and it's sort of, you can see here the big problem is 72.55 has been a support area and a resistance area here at the beginning of middle of October. So it's a bit of the system trigger side. You've got to follow the rules. It is a bit of an aggressive one, but we've got 3 that are winning and 1 that's losing at the moment. So that's where we are for Friday's trades. Today, it's a bit early for an end of day setup, but currently there's not a lot going on. Let me just refresh my. I'll share this. It's on a different workstation. That's all. I will share this one. Currently, we're looking at this Kiwi yen is a potential. Oh no, that's very much. It's looking to potentially go long, but again, if I bring that up, Kiwi, what I said was Kiwi yen, no, Kiwi Swissy, sorry, Kiwi Swissy. Where's it gone? Let's get in here. So it's New Zealand Swiss franc. and it's it's very much channel bound, so it's not trending. I'm not sure why that. Well, I said, the system I'm talking about over here has been very, very successful for me, so I shouldn't be questioning it. But it's worked for me for many years. But you can see here that it's not as a trend following system, which it is. It's been chopping. This particular asset's been chopping around now. But yeah, at the moment it's trying to suggest it may go long, but as you can see here, or hopefully you can see here, it's very much channel bound. The knowing the way the system's written, the way it's been written for me, this big floor here at 51. 60 here. This is beginning of the November, but really much channel bound. It's very much stepping, isn't it? It's not trending. It's moving lower, if anything. This magenta line here is the 20-day moving average, and it's flattened, so it's not trading. So although the system's triggered or triggering potentially, it's obviously a long way to go before the end of the day. So obviously it's following through from the big strong uptick we had on Friday, but again down a bit like the Swiss yen. We're out of the money on it as well, but that's still pushing up, so we could get back to the 53 or the 52.40s at range, and 52.50 again is the resistance area. So 51.60, 50. It's a very much range, man. I probably wouldn't waste my time on that one, to be honest, because there's significant resistance there at 52.20 there. You can see this line here. So anyway, that's what my off chart systems are looking at. Anything else? A quick refresh, because it's continually monitoring. It's continuing monitoring. So currently, no, there's nothing on the more aggressive one. Just those ones from Friday. Two that didn't take the stop loss, was a bit too aggressive. The only one was that DAX position from Friday, which is I say in the money. So DAX is in the money, the S&P 500 is in the money, and the US 30 is in the money. The Swiss yen is out of the money. So we'll update you again tomorrow's webinar broadcast about how that's panned out. Let's just have a look at we haven't actually looked at the majors, have we? So Euro. Oops, let me get rid of that. Euro and pound and yen this morning. So let's just do these in order. Actually, let's look at the Aussie, because the Aussie is the weakest of the majors this morning, and the Swiss franc is the strongest. So Aussie dollar on a daily basis, again, having a bit of a down day. If we just look at the intradays for these ones. So a down day so far for the Aussie. Opened relatively sort of weakened, and it's bounced off the 65 area again. Remember, we talk about that all the time. 65, a key target area for many going short, big, but it's bounced back again as well. So 61.20 is where we're pivoting through at the moment, and not a great deal of activity there on the Aussie there on this hourly chart. 61.20. The majors, the yen continues to continues to sort of fight back against the dollar, if you like. So again, another one that's consolidating at highs, and it was a bit of a sideways week last week, wasn't it? We couldn't get over this 154. 155 zone, and we had 154 as our support area. So we got this 100 pip range last week. We're currently up from the lows today, but 154 is the support area. We have been under it. We're up from those lows, and we're literally just shy of 38% on that, aren't we? Yeah, that one. Where are we? 154.38. Yeah, literally, that would be the a level we're pivoting through. But again, a little directionless, given as little data today. It kicks off tomorrow. Big day Wednesday. So stand by your bunks for that. 155 remains the upside target for dollar yen. 154 as a big support area here for dollar yen. The euro, as we saw last week, we spiked here, and we remember telling you we marked this area here, 103.32. That will come into play at some point, but When, we don't know, but it's still a key area. Positive start today's the dollar weakened a wee bit as bonds ticked up as well, and yields came off following the appointment, the Treasury appointment from Trump. So you see the gap on open here yet to be filled. So watch that. But 105 remains a resistance, and a strong resistance. Major support area in the past. Can the euro get back to it today? Not currently at the moment. Those PMIs on Friday were terrible, weren't they? It's really did give the euro a big whack. Similar with sterling, PMIs were a bit of a miss, a bit but we've gapped this morning on the Treasury appointment. But again, another one that's ran to a big resistance, 126, and then bounced off that, and looking to go short there on that 7 o'clock candle completing at 8. Again, it's out of the money here on that hourly chart frame, but if I zoom this in, you can see the trend remains very much to the downside. Big support here at the hugely psychological 125, which we sort of penetrated on Friday, but and bouncing, but can't breach 126 so far today for sterling. So that's about it, my friends. Let's have a look. Is anything else I've missed? Anything anybody else wants to have a look at? We looked at gold, we looked at silver, we looked at the trades from Friday, potential trades for tonight. There's not a lot going on, to be honest, so be careful trading in relatively quiet markets, but there's obviously opportunities all the time. So the big data kicks off tomorrow. The main data for today is obviously already out with the IFO data, but overnight, I say we got the CPI from Japan. The main data is the consumer confidence number tomorrow, and the new home sales data from the US tomorrow, 3 o'clock Universal Standard Time, GMT as well in the afternoon, ahead of the US Open, which could be a very interesting week ahead. So take care, and I will see you all again tomorrow, and all the very best, everyone, and may the pips be always with you.